So today we've got an amazing guest. This is a guy who I've had many conversations with, including a debate on stage, probably a few years ago now, about one of the key topics around data that we're going to talk about later on. Trust me, it was a heated debate. I was actually the moderator, so I had to stand between him and some others. And his views have only strengthened. Alistair, so good to welcome you on the podcast.
Hey Carl, thanks for having me.
Hey, no problem at all. So, Alistair, you've had an illustrious journey. You've been let's just say, the poster boy for AI and data within the accounting practice space. So, tell us more about your background and your firm, which was your firm. It's not currently your firm.
Yeah, sure. So, I spent 16 years of my the first part of my career at PwC across various offices and various different lines of service. So, I started in Manchester, ultimately moved to Amsterdam, and then back to London and worked across audit, business recovery services, and consulting. And latterly, I moved into a business unit called My Finance Partner, which was PwC's way of trying to work with much smaller, faster growing businesses. Out of that, I realized there was a huge opportunity in the market. And together with my co-founder, Luke, we jumped from PwC and set up a firm called Flindr. So I was a co-founder and former CEO of Flindr, which was one of the original outsourced finance function firms where we work with fast growth tech and e-commerce businesses. We heavily leverage data to deliver kind of really deep insights to our clients. And I think it's fair to say that we didn't start that business wanting to build an accounting firm. We were obviously a regulated accounting firm, but we built that business with the whole design principle and philosophy of how do we deliver insight to fast growing businesses. And that insight was through data, through reporting, through insightful conversations, and what's now termed as a fractional CFO. And then about 18 months ago, we exited that business via a sale transaction. I exited from a directorship and a day-to-day operations perspective, but I remain a consultant and I help them on their M&A strategy. And that business is called Ascendant. They're highly acquisitive. Since then, maybe we'll go into a little bit more, but since then, and kind of twiddling my thumbs the day thereafter, I started writing a weekly newsletter called The Naked Accountant, which comes out every Saturday at 8:15 in the morning. I run something called the AI Exchange, which is for practitioners to come along and talk and share around and exchange ideas, what they're doing in the world of AI and how people are getting benefit and actual value in the firms. And the main thing that I spend the majority of my time now is I've co-founded another new business, a tech company in accounting called Numbers, where we're developing a new AI native operating system for accounting firms together with an AI engineer co-founder. And of course, doing this podcast, I'm an ACCA member.
Fantastic. Alistair, thank you so much for that concise background, which really doesn't highlight the innovation that you quite visibly brought into the profession during what was quite a reasonably short time for Flindr. Now, I'm obviously glad that you are not the naked accountant today. We want to get as much reach as possible for this podcast. However, what I do want to do is just to dive in a little bit deeper on a couple of bits of your background before we get into the meat of this episode. And the first one was that the phrases that you used really resonated with me and I guess reinforced our initial conversations around Flindr. Where you say co-founder and design principles and so on. You very much set up Flindr as a startup, as a performance-driven business rather than a accounting practice. Quite relevant given the name of this podcast, From Practice to Business. So tell me a little bit about that. I imagine it's fairly obvious to you why you did it, but it would be great for the audience to understand why you did it that way. And also, I would like to know if there was any challenges insofar as recruitment of the right people or so on that you found through being set up in such a different way compared to most practices.
Yeah, so there's quite a few component questions there for me to unpack. I think just first of all, the naked accountant, the concept is obviously it's around authenticity and transparency and kind of getting that sharing the things that I want to know as we built Flindr and all the questions that we had, and ultimately we found that in a community. And Carl, you were absolutely one of those. We've had a number of conversations along the way with you being further along your journey. And so it was my way of being able to get some of those bits that I missed out into the community. So if I take it back to your question, so I think you talked about, or you asked me the question on when we were building it, calling it a business, design principles. I think, first of all, we had a huge advantage in coming at building a new style firm with no bias. And so what I mean by that was both myself and Luke, we spent a number of years, 16 for me, 8 for Luke at PwC. And so we didn't really have this bias of what's the blueprint of a traditional accounting firm. And so because of that, we were able to take a blank page, and I guess we were influenced by what we were seeing in the clients we were talking to, my finance partner. We were influenced by the clients that we had worked with in PwC. And some of those companies were obviously like significantly larger. We're talking kind of FTSE 100 companies or mid-cap companies. And so in some ways, we didn't know any different, right? We kind of came at it of what does a good finance function look like? And so we were drawing inspiration on, well, if you look at a good finance function in a large business, you have a transactional processing or kind of an operating kind of business as usual processing center. You have you have an element of that that's there delivering insight to the business. That's ultimately what they're trying to do. And you have an element there which is about let's be well governed and well controlled. And more often than not, the companies we worked with would have shared service centers, nearshore, offshore. They'd work with third-party BPOs. And so we kind of had the inspiration from those and say, okay, that's what a good finance function operates like. That's what a good finance function should be doing. It should be as efficient as possible, well governed and controlled, but ultimately delivering insight to the business and business partnering to make good decisions. And that's effectively what we built there. And I think, maybe in the feel and look of the brand itself and the culture around the brand, some of that was then inspired by the companies we wanted to work with. And so we were very conscious about, if we were working with a tech business or a fast growing e-commerce business, what does a good partner look like and what can they align with? So I guess kind of, throw all that into a cauldron. That was the brand of who we are, how we spoke, what we delivered.
Sure. And so the second part of the question, which I know I loaded you up with a couple of questions there at once, the second part was whether that approach, and don't get me wrong, I think the approach was fantastic, and I've got so many questions to ask you, probably not for this one, I'll try and hold them back. But was there any challenges with that approach when it came to, I guess, surviving and thriving in what is quite a traditional practice-centric, partnership-centric profession?
Yeah, I mean, huge challenges along the way. And if I'm honest, I've not had therapy about it, but I'm sure if I had therapy about it, it would unpack a load more things that I've just kind of, put to the back of my mind as we went along, and many sleepless nights over the 7 years, which was effectively the journey that we had. I think, you asked me specifically about people in the first part of the questions. I think there are people challenges that I'll talk about, and I think there are also financial challenges that I'll talk about, right? Because of the type of product that we delivered and the type of bundling, the price point we had. And so first of all, people. Now, our first hire in the business after myself and Luke was actually a non-accountant, right? Which I think is a little bit more in vogue these days than it was maybe back then. But even still, two effectively partners, right, is what you could describe. We were not a partnership. We were never going to be a partnership in the sense of bringing people through the ranks and them having equity in the corporate. We were a corporate. We were 50% shareholders in the business together. Ultimately, I was the CEO, Luke was the COO. He reported to me, I reported to the board, of which it was me and him, right? So we had this structure and we had real clarity on roles and responsibilities along the way. But ultimately, we did have people that were candidates that were coming for interviews or senior people asking about, what does equity look like? What does partnership look like? And it was a flat, this is not partnership. This is not the direction it's going. You'll be remunerated very well. And there'll be other incentives in the business for meeting and exceeding objectives, but this is not partnership. Now, fast forward to where we are today, obviously, more private equity or consolidated groups have options in the business. So time moves on there, but at the time we did not have that. So that was one of the hard questions we had to have with senior people that was joining, where potentially another party, another firm they were looking at could offer them a partnership track, right? And that promise at the end of the road. So that was definitely a challenge. But if I go back to our first hire, was he was effectively a data analyst, data scientist, and an engineer. And for us at the time, that was absolutely key because we wanted to really heavily leverage data and stitching data from different applications across our clients' businesses. So this isn't necessarily data within our business, within Flindr. It was very much, how do we sell a service to our clients that enriches the financial data and enriches the insight to be more business wider insight that we can take to them. And so an example of that would be, we'll be taking for an e-commerce business, we'll be bringing in the zero data financial side, but we'll be bringing in Shopify data from the sales side. We'll be bringing in data from an inventory application. So we always spoke to our clients that finance data tells you what's happened, but it doesn't tell you why it's happened. The operational data tells you why it's happened. And so our first hire, being an engineer, was very important to be able to do that and continue fulfilling the vision that we had. And then I think hire number 5 or 6 was a dedicated marketing person, which again, in such a small team, to have 2 roles which are non-core finance, what we now call FinOps, non-financial orientated kind of front office people, was very rare within the team. But I think it was the right decisions for us. But yeah, building a team from when you're 2 people, 3 people, 4 people, and selling the vision to somebody and someone that's the caliber that we wanted from. We had a lot of people from big 4 firms to sell that vision to them, and for them to take a leap of faith was quite a challenge at times, but they bought into the vision more than the actual business history and the business pattern. So I think painting that vision was a really important thing at the time, and kind of telling the story of where we want to get to. And we ultimately built the team up to 50. Some of those we retracted because there were different functions at the time, building tech products and whatnot. But ultimately, we sold the business with about 40-ish people in it. Yeah.
Sure. Okay, fantastic. And you mentioned that there was challenges financially as well. You mentioned it was related to the pricing point, and I think this is an ideal time to drop in some context as well before you elaborate on that. So your service was very far removed from a traditional year-end accounts and knock out a tax return on 31st January. It was a much more hands-on service, the likes of which many firms are aspiring to, but perhaps don't know all sides of the story when it comes to actually delivering on this. So it will be good to hear that side as well.
Yeah, it's actually super interesting. I've just written an article, which I don't know when this will go live, but my article will go live in a few weeks. It's the contrast between a vending machine firm and a bottler firm, right? And 2 ends of the spectrum of the white glove service that we provided or aspired to provide versus kind of the cookie cutter side of things. So I think if I take it back to when we started 8 years ago, looking at £500 into the business each. We brought no clients with us. So on day 1, we had no clients, no staff, no revenue, and no way to pay ourselves, right? So we started from absolutely blank slate. We couldn't bring our clients from PwC, obviously, because of the restrictive covenants. So we had to go out hunting pretty early and pretty fast. And our average price point, it's risen over the years. Initially, for the first 12, 18 months, it was £950 a month. More recently, in the last, it's settled probably, and ultimately it's about £2,500 a month is our MRR for a consistent subscription fee. Typically, we on-sell about 15% on average of consulting or one-off project work on top of that. Now, to your point of what do we do for that $2,500 or that 30k per year? If a company came to us and said, hey, we need VAT, we need tax, we need accounts done, we would say, that's great, I'll happily introduce you to someone. That's not for us, that's not what we're going to do. So we would actively discourage working with those businesses. That was our strategy back then, and it served us very well. So we were very clear on the types of clients that we wanted to work with. We were very clear on the personas of the people we wanted to work with. We were very clear about the services we as a firm enjoyed delivering, and our team were interested and had exposure to delivering as well. And so that bundled up to about £2,500 a month. Now, clearly, when you are in the early stage and you are, 12 and a half, 15 grand a month of subscription revenue, if you lose a client, that's a massive hit to you. And we did experience that. We worked with a client which we knew had cash flow challenges, and we worked with them. We managed to extend their runway. We managed to work for them to continue in business for a good number of months longer, but ultimately their funding dried up. And so straight away, it was a reasonably sized client. So straight away, you lose three and a half grand out of 15 grand, and you still have to pay the staff. That is a huge amount. I mean, everyone can work out how or figure out how much an average kind of semi-senior or equivalent role costs. That's a big hit to your EBITDA straight away when you're in the early stages. So those types of challenges, we grew fast because of the average price point, but also it was in the early days a risky business model to have because of the high concentration of fees per client. So that kept me awake. Yeah.
I can totally empathise with that. And we'll come on towards the end of the episode. We'll talk a little bit about your exit journey. But I want to, at that point, we can talk about maybe perhaps the relief you've got now of not necessarily having those concerns about client churn, etc. But let's just focus on the Flindr journey for the moment. Now, you became very prominent in the accounting space, not least because of your efforts with ACCA, but also because you become, let's be honest, the poster boy for data. And we all hear that data is, it's the modern day gold. It's what everybody wants. But you actually took that data and, as a business, translated it into tangible value for your clients. That was, from what I can see as an outside observer, one of the core drivers of what you did and how you did it differently. We want to talk about financial health and how accountants can best serve their clients, but it would be great to hear a little bit more tangibly about how you helped your clients as a business. So what kind of things did you do where you stepped up beyond the compliance accountant? What sorts of conversations were you having to help them?
Yeah. So I think, where a listener will get the most value is to make this real and bring in some examples. I have to obviously anonymize some of it a little bit along the way. So I may change a few of the facts to make the story still relevant, but protect our client base.
Of course.
I think, so predominantly we worked, you could almost argue in Flindr we worked with three sectors, yeah? So first sector was SaaS businesses, second sector was e-com businesses, and the third sector were professional services, by and large, right? If I choose the first two, because they're probably a bit more data rich. So if you imagine an e-commerce business, average price point of £150 of a product they're selling on Shopify or on a website, people around the globe clicking on that and buying a product or buying a basket, should we say, of 1.5 products in a basket, being shipped all over the world from various warehouses, maybe in hubs, different sources of that traffic that the e-commerce business is paying for. All that is really rich data that's not really, historically, is not in the same conversation as a finance person, right? They're kind of two conversations that often happen. And growing e-commerce businesses, they don't have an in-house finance team. They may have an external accountant. They may get management accounts once a month on Xero, little explanation, or once a quarter on Xero. As they grow, the data increases in volume and becomes much more relevant for the strategic tweaks or the strategic levers to be pulled. And so if you take the e-commerce business, we would a full service would be, we provide them management reporting, so not just management accounts, management reporting incorporating like financial and non-financial data, CFO support, so we will sit in a board meeting, act as their CFO, and this is very different to, we'll provide virtual FD services where, hey, we provide an analytical review or we kind of read down the P&L, whatever. We're like deeply ingrained in board meetings, strategic decisions, modeling forecasts, helping them with fundraising, discussing due diligence items with potential investors, hypothesizing with the board what scenario analyses look like, but also looking at the performance management of that business. So we would look at unit economics. So first of all, we get the data structure set up in the finance system to therefore be able to marry up to what's in their e-commerce business application, whether it's Shopify or something else. And we would talk to them about, okay, well, on the face of it, you've made, £1 million in revenue and your gross margin is, 300,000 or whatever, right? But that doesn't really dig into the details. So then we would go a layer down and a layer down and a layer down. And so we'd then be looking at, okay, well, your average price point is here. Your volume this month is here versus the budget that we would have built for them. So your average order value is actually higher than your budget or last month, but your volume is down. Okay, well, let's understand between finance and operations why the volume is down. Okay, actually, volume is down because maybe we plowed less into marketing, or we've used a different marketing channel and it's not been as powerful to be able to give us the volume that's come through the website. But also, maybe the volume is down because the customer acquisition cost has been higher in this particular month or this particular channel. And so we're getting down to, two layers down in terms of strategic levers. And so ultimately what we're trying to do is we're trying to understand how powerful is the spend, how likely is that cohort going to come back into the business and buy, how much are we having to reactivate those customers, what are the unit economics across different geographies, different product types, what are returns rates. So that's another great one in the e-commerce business. They can range from 10 to 30, 40%, depending on the genre that's being sold, depending on the time of year and the cohort. So all these different factors go into a conversation with a client, right? Rather than just, hey, your revenue's 1 million. It's kind of really deep, okay, what does this look like? What happens if we spend more money in the US versus the UK? Okay, our margin might go up, but are we shipping? Is the shipping cost a lot more? Are we more likely to get a repeat order? Are we more likely to get a return from them? All these different factors are what goes into a conversation. So hopefully that brings it to life a little bit.
Do you know, it really does. And I think that one of the key things that you've expressed here is the deep understanding of the market that you were serving as well. You naturally had that, but many firms will see a strategy of niching as a solely marketing strategy. But actually for you, it's clear from what you've said that it's a delivery mechanism as well. It's how you provide the service. I think it's fascinating. I know from my own business that I see the power of the data and where we're going as a business. I see that as the future. However, I'm just mindful of the audience listening. Some of them might be listening and saying, yeah, that's all well and good, but I do accounts and tax returns. I'll file on deadline day. You and I know that accountants can deliver tremendous value even to the smallest of businesses. But let's say we've got an accountant who's listening in. Perhaps they are senior manager within their firm, or indeed a practitioner that's wanting to pivot and start doing more for their clients. What would you say are the first steps that another practitioner who hasn't got the PwC My Finance Partner background, has not necessarily had the same exposure, how would they evolve into delivering that kind of value to their clients?
Yeah, so I think, where I talk about data and those types of conversations, that was something that we were passionate about. We as a business enjoyed that, right? And that was the route we went down because we were in those sectors. Now, I was having a conversation recently with someone that worked with GPs, so doctors' surgeries, right? And doctors' surgeries don't have a stack of data. But actually, you can take a huge amount of value to your GPs. If you work with 100 GPs, right, you're going to have a breadth there of 3 partner practices, 5 partner practices, 10 partner practices. Very simply, you can take those data points and bench. That is literally the most basic way of doing it. You can say revenue, number of partners, revenue per partner, and you can just benchmark. And then you can go, you can compare, You can prepare a white paper. You can take it to prospects. You can take it to whoever's in the lower quartile and say, hey, do you know the average GP earns, 150 grand for this type of size of business? Let's help you get there. And I think you don't have to have loads of data points. I think what you really need to do is you need to two things. One, you need to understand your clients, right? And I don't maybe I'm overstepping the line here. I don't think enough accountants take the time to understand their clients. And I think
so. Alistair,
two,
I'm gonna jump in. I'm gonna jump in there, and I'm going to give you not just a second-hand conversation you can pass on. I want to just provide you with something very tangible as to understanding your clients, and I'll actually challenge that and be perhaps a bit more aggressive on your behalf. I think you need to have a passion for that industry as well. So, for myself, my first niche market was martial arts schools. And we as a business ended up looking after about 250 of them. I got to know, but driving to meet a prospect, yes, this was a very long time ago. Driving to meet them, I would be able to instantly know the local demographics insofar as it mattered for parents purchasing a tuition service for their children. The moment I walked into their dojo, I would be able to tell by the square footage, etc., exactly how many kids they could fit in. I would then know their staffing requirements. From the art that they taught, I would know about the equipment they sold and so on. We had relationships with the equipment manufacturers, with the DD collectors and so on, even so far as being involved in the governing bodies of that world. That's going from having a website optimized for martial arts schools and looking after one or two to having a dominant position across the whole market, which we now do in franchising. So that real understanding of your clients' needs and their business is so powerful. Sorry, Alistair, I've totally interrupted you, and you were going to come on to the second point.
I think you've made the point for me. I think the other thing is as well as really knowing the sector and what goes on, I think it's about asking your client what they value. And it's just not done often enough with, we'll use the example of, a firm that provides accounts and tax. There's some very simple things they could do to increase what they sell to the clients by just asking and listening, asking what their pain points, asking them what's going on and listening to them. I wrote an article recently on account planning workshops, fancy consulting name for think about what the pain points are in your client and take a proposition or take a service that hits the sweet spot of their pain point. My value takeaway to listeners here is think that you run a business and don't necessarily do all the work or think you need to do all the work and be in the business. Like think about your firm as a business. So take value to your clients, but ask them what value is.
Fantastic. So many ways we can take this episode, but we are going to stick with the data point. So it's clear that even if you haven't got the passion for data, if you don't employ a data scientist, you can do more for your clients by, as you say, knowing them, asking the questions, and then delivering. But data, we teased at the start of this episode about this panel discussion that became quite heated. I was a referee stuck in the middle, and it was about that thorny topic of timesheets. Now, I know that those listening, there'll be some who still use timesheets blindly without even realising there's been a debate. There will be some using timesheets wondering, how on earth do I ditch for timesheets because all of the cool kids are doing it? There'll be some who will be standing there with quite some pride that they've ditched timesheets. And there'll be others like myself where they're utterly confused, having ditched timesheets probably 3 times, brought them back in 3 times, and having a rather mixed approach. Now, you were quite firm in your views that actually timesheets are really powerful for a firm. And I would love to hear a very brief snapshot of your views on timesheets, but particularly in today's age of AI and where the profession is going.
Yeah, so I think a very, very, very brief history of timesheets. I filled them in at PwC. I didn't fill them in at PwC. And then when we built Flindr, we thought we were cool. We don't need timesheets. We're building a subscription model. and we got to a point with a certain number of people where we felt like we weren't really in control internally of what was happening. And so we brought timesheets in. Now, I don't care if timesheets are right to the nth degree. I care that timesheets are directionally correct, because we generally don't bill our clients on timesheet data, but we do run our business on the data points that we have, of which that is a very powerful one. I think I just have to be a little bit respectful of when we talk about accounting and tax firms, there's a broad spectrum of what that means. Now, we built our business on a subscription model where it's you sign up for a bundle and some add-ons to a service and you get billed the same fee every month. Clearly, I respect that there are tax firms that are built in different ways, maybe success fees, contingent fees, but also maybe on time spent, right? But nonetheless, the experience is that we generally don't use timesheets to bill the work that we're doing. Unless there's some really weird nuanced project work, we bill it and it's a fixed fee. Let's, for argument's sake, say it's $2,500. But what we do want to do is we want to understand a number of factors that go into the input costs, and therefore what our true margin is on that individual client. Now, we can only really do that by tracking timesheet data attributable to that client or those series of clients across the portfolio. That gives us not just the blended margin at the end of the month that we see, but it gives us the margin client by client by client. So we can see, e-commerce versus tech, one is higher margin than the other. That's quite interesting. Why is that? Actually, maybe that's because e-com has real complexity around inventory. And guess what? In a tech business, you don't have inventory. So are we actually pricing our e-com bundle correctly? So that's one area, right? Then client to client, are some clients maybe more problematic than others? Now, you can get this in different ways, but when you're running a business that is growing significantly, data helps you much better than conversations of client to client. It can help you identify the top 5 or whatever that you want to pick up on. And so are there clients that are just not giving the information and we've got a lower margin for whatever reason, and actually they need to have a higher fee? Another reason is internal training. Are we just generally poor in one area, or are individuals poor in one area, and therefore there's a training need in the business to help improve delivery, but also margin? And so it helps us at snapshot look at that. And then I think the final one is, are we in the new day and age, are we doing a process which we've always done manually that is taking a significant amount of time, and actually there's a better way of doing it? And therefore, can we build a business case around the data and the cost of doing a certain process versus buying a piece of technology or developing a piece of technology or stitching together some technology or some AI, and understanding, are we going to get return on our investment there? And so there's a whole host of different valuable attributes to recording data and timesheets, I think.
Absolutely agree. And I think the key takeaway is that, we're actually fairly aligned in our views on this, but respect all views on it. That using it as a mechanism for pricing, so multiplying a fictional hourly rate by a fictional number of hours, because we know that timesheets aren't always necessarily the truth, and somehow that being the quantification of value doesn't make sense. But if you're fixed fee, it absolutely does make sense to manage your stepped resources, because if you can squeeze one more client being serviced out of a salary, then why wouldn't you use your biggest cost and your most valuable cost more effectively?
Another thing that I thought I want to share is that, I just think it's quite important in the people business. It can also identify where the load isn't spread evenly across the team, and it can identify someone that's maybe doing more hours than they should be, and that's actually quite an important thing to be able to identify and take to someone and say, we notice you're doing extra hours. Is there anything we can do to help you? So I think that's actually one of the really important things. The whole people management and talent retention, or looking after talent, can be helped there as well.
Agreed. Okay, so now we're going to talk a little bit about the exit process, and we won't dwell on this too much because it's not the core focus of the episode. And then we'll come to some of your views on the future. But the exit process, we shared many conversations. I remember some great catch-ups over at the Vineyard in Newbury, where you were talking with such passion and conviction about Flindr. You shared with me the touching story of how it was branded and so on. So, I know how much this business meant to you as a founder, co-founder, should I say? As co-founder, you were very passionate about it. You drove it forwards. It was the real, from a business perspective, rags to riches, 500 quid in, build it to exit. How did it feel Monday morning, 9 o'clock, after the weekend that you sold?
Um, so I actually recorded a video. I went for a walk in the forest near where I live, and I recorded a short video. And I think across that 10-minute video, I probably said about 5 words in it, because I think it's fair to say there's a moment of utter disbelief, to be honest, because I mean it was quite a quick journey, but it was a journey. It was an intense journey, because
Mm,
it was
mm,
7 years of really hard working at times in the early days of 6-7 days a week. So I think there's an element of disbelief. I think, in honesty, I've probably not processed it all, because it's quite a life changing, monumental
mm.
um, activity. So I think one of the strange things was, my role in the business had kind of wound down, because I was building up my time on numbers, the kind of the new business, and so I've kind of been winding down maybe 3 days a week, maybe 4 days a week. Obviously, as the transaction was nearing, I was 5 days a week to kind of get the transaction over the line. But then, pretty much because I exited as a director, I exited operationally, and most things were handed over to Luke already. It was almost like a light switch, where I check my phone. You be on a walk or whatever, you check your phone. Carl, you're probably better than me at this, but I check my phone for emails, and I'd have emails and respond to them, and I check my phone on the walk, and like, nope, nobody, I didn't matter anymore, and that actually was, there were lots of different emotions that I felt
Mm.
at the time, and one of them was, of course, hey, I'm not important. Right?
Yeah, it's
Having been the most important person in the business, arguably, or one of the few most important, but looks probably more important than me at the time, but most important people in the business. People come to you for kind of ultimate escalation, and you deal with things, and you get copied on emails or whatever, to pretty much like silence. That was
mm.
a very strange, empty feeling almost, but
Yeah, and
also
I
it
think
was what I wanted.
I think we also underestimate the amount of our personal identity and how we present ourselves to ourselves, let alone the outside world. Um, and how much that is associated, tied up with our business and what we're passionate about. So yes, I can only empathise that it must have been tough, emotional. However, you're doing some amazing things. You're not just sitting back and twiddling your thumbs and hoping for the best. You're doing some amazing things around AI and really provoking that conversation amongst the practice community. Now, many firms, my observation is that they will call themselves innovative by virtue of the fact that they've bought a piece of software that was innovative once upon a time, whether yesterday or 10 years ago. Um, but you're looking at actually what is out there, what are the opportunities for practices and for the value they can deliver to their clients. So please do tell us more, open our eyes to what the opportunities are in this space.
First of all, I've run two what we call AIX dinners, or AI exchange dinners. It's a community we're trying to build. Dinners are just one of the routes. There'll be other things like hackathons, workshops. I would love more members, and we last time had a heavy mix of males there, so I'd love all members from all walks of the world to sign up and to join us on that and explore and share what they're doing. Um, I think kind of if we look at what's discussed in the AI exchange, the in fact, the last question, or the last session we did, we asked the question: if AI could do anything, what would you want it to take away? And it was a resounding, I want the admin taken away from what we do and they're predominantly business, they're leaders predominantly, right? But there's a heavy amount of admin that comes with it, and they want the admin to be taken away. So we very much look at it as like front office and back office in terms of what AI can do. And there are examples in that exchange where a proposal might have to be written, where previously it might take 3 hours to write a proposal. That proposal is now being written in 15 minutes. That's 2 hours 45 minutes per proposal. That's incredible that that can be done. So it's moving from a preparing and reviewing, or preparing, thinking, reviewing, to a just a reviewing state. And I think that's where most people want to get value from. Still what we call human in the loop. We still want to be in the loop. We're still accountable. We still want a high quality deliverable to go out the door. But let's see where we can use technology to minimize the preparation. That's an example of back office. When we look at front office, we can split that into two parts as well. Front office can be, we have compliance processes to do and deliverables to get out. And that's where we've got examples of people that have built or hacked together tools with Gen AI, where it's kind of like, here's my VAT return process that my junior team member would normally do, and then bring me something to review. That first part is being done by Claude or by Gemini, or it's being done by an LLM, and the output's being reviewed. Again, is speeding up the time to serve. Yeah, it's reducing the amount of kind of low value, low level work. And maybe we'll come on the concept of what's that mean for the profession and the development. So that's an example of kind of a front office task that's more compliance led. But then there's also tasks which are more insight led, right? And I think this is really interesting, where we've got examples of people using Notebook LM. And so what they're doing is they're feeding all sorts of documents into Notebook LM across their client portfolio. And they're using it almost like as an extension of their brain. So they're just not able to recall 20 clients, multiple conversations per client, multiple reports per client. And so they're using Notebook LM to harvest that and come up with ways that they can help their firm, help their clients in more advisory capacities. So you can see how it's being used for compliance-led processes, but also for insight-led processes, delivering ultimately what we talked about at the beginning, delivering more value to their clients.
Absolutely. And I can speak as a totally uneducated observer to this world. The extent of my programming skills were at the age of 5 on an Acorn Electron, playing around with BASIC. 10 print hello world, 20 go to 10, or something along that sort of lines, which is a joke that I'm sure coders will understand.
I guess.
It's about the extent of my programming knowledge. However, I've been playing around with some of the vibe coding tools. For those listening who might not be aware of vibe coding, check it out. If you've got any interest at all in this stuff, just have a play around. I used a tool called Lovable. I can't confirm whether it's the best or not. I don't know. But what I do know is that some of the fuzzy visions that I had in my mind of what we could do if we had this spare time and budget to invest in a development team, actually in no time at all, and in plain English, even a gobby Essex boy like me could knock out something that was half decent. So it is scary what this stuff can do. Alistair, we're now going to move on to some of the rapid fire questions.
Cool.
I could have spoken to you for hours on this, but we do have time limits, and we don't want Pat, the wonderful lady at the ACCA who heads up the practitioner community, slapping us on the wrists. So I would like to just run through a few templated questions that I ask every guest. There's going to be a little bit of a tweak to one of them, and that's actually going to be the first one, which is, with the benefit of your hindsight, looking at the journey that you've had, how would you advise yourself differently insofar as the Flindr journey? What would you have done differently? What lessons have you learned along the way?
So I think the two that jump into my mind immediately, which I guess what you're after, is one, sell earlier. Yeah, I think as time goes on, it just became a little bit harder for us for various reasons. And in some ways, I was sprinting a marathon. So the 7 years, we worked really intensely across the 7 years. And so I think, maybe there was a tail off of some of the energy. So I would say probably sell a little bit earlier. Or transition or exit a little bit earlier. That would be one. And then I think the other one would be just focus even more on the niche and what we can deliver in those niches. Like, go really, like, what you've done at D&T is inspirational of how well you niched. And I think getting to even deeper in the niches and delivering even more value and things that are even more specific, we would have done earlier and sooner.
Absolutely, and it scares me when I think about the data skills you have. What we're trying to develop. If we could combine those, how powerful that would be. But hey, something completely different. Okay, so next question. Let's rewind a little bit further. What advice would you give to your younger self?
Uh, yeah, that's a good one. Um, you can tell I've had no advance warning on these, right? Uh, maybe part of me would be just try it sooner, don't wait. I
Okay.
think would probably be the advice. What's the worst that can happen?
Fantastic. Next up, and yeah, you're going to hate me given that you've had no steer on these questions, but this is a fairly standard question that you've probably been asked at some point. If you were to host a dinner party and you were to invite three other people, they can be dead or alive, they can be fictional, non-fictional. Who would you bring to the table and why?
Oof, that is a very difficult one. So I'm a massive Formula One fan, so I'd probably want to bring David Coulthard. He was my hero, being Scottish. He was my hero when I was growing up or watching him. So I think he's
Fantastic.
pretty good fun, pretty good value. So I'd bring DC. Um, Probably, well, do I have to go to someone that's no longer around? I mean, I think Margaret Thatcher would be quite an interesting person to the Iron Maiden
Okay,
would be to bring to the table. So let's bring her. Not sure how her and DC would sit together, but that would be interesting. And then the final one, I'll leave that as I'll come back to you another time. I'll have a good think
no
on it.
problem at all. Next up, what is your go-to source for information? So it could be a great book that you've read, it could be a fantastic podcast, a blog that you subscribe to. What is something that others could take inspiration from and check out themselves?
So I'm a bit of a geek in the sense of like when we were building Flindr, I try and absorb as much business knowledge as possible. How have other people built businesses? And so for me, I love the podcast Built to Sell.
Okay,
I love the podcast by John Warlow. I love the podcast My First Million by Sam Parr and Sean Puri. So I'm a big podcast fan. I also love the Acquired podcast. Those guys do an incredible job. If you know that one. In terms of books, I think you actually recommended Rocket Fuel to me a few years ago, Carl, and I recognise that in that Luke and I being is it the visionary and the integrator? I think they're the terms, but that's a great book. Yeah, so maybe they're my key sources of. I mean, I do listen to quite a lot of podcasts, so but those are the main podcasts.
fantastic. Next up, what is the best purchase that you've made that's made a transformative difference? And it can either be personal life or professional life, but relatively low cost. So try and keep it under about 50 quid.
Well, it's a bit more than 50 quid, but it's my Aura ring. So,
Okay,
I mean, you could get them cheaper, but I've got the stealth one. So, I don't know, $250, £7 a month. My Aura ring, I've had it for 5 years now, and it's the first thing I look at in the morning to tell me whether I have a good night's sleep or not. I'm obsessed with sleep and sleep hacking. I'm very obsessed with any type of like personal performance improvement measures and data. Obviously, we talked about data. I'm a massive data freak for myself as well, heart rate monitors and all sorts. So my Aura ring would have to be like the best purchase ever. Yeah.
fantastic. Now we're going to rewind a little bit. What did young Alistair want to be when he grew up?
An astronaut, first of all, then a F1 driver, and then an architect. So they're the three in succession. I was told by my dad that computers will do architecture, so there's no point in doing that. Then I switched to wanting to become an actuary, and then that was fleeting, and then I moved into accounting
Wonderful. And
as a dream job.
do you know what's amazing? But I've not come across anyone who said, yeah, when I was 8 years old, I wanted to be an accountant.
Yeah,
Staggering, isn't it?
strange, though, isn't it?
Alistair, This has been a fantastic episode. So many knowledge bombs here. You've spoken about the Flindr journey, how you benefited from the blank canvas and no preconceived ideas of what a practice could look like, and built it as a true business right the way through from embryonic startup, 500 quid each in the pot, right the way through to exit. You talked about how you seeked inspiration from your clients, but also feedback from your clients. You asked them what they wanted, and then you delivered on it based on the data that they had and the insights that you were able to give them. One of the things that really stood out to me was that the data tells you what's happened, but not the why. And I think that's a timely reminder for everyone listening that actually being not just the messenger, but being the translator is the real power that we can add to our clients, whether it comes to why their tax bill's a little bit higher, or actually some really rich data and insights that transform their business. You talked about how you've stayed in your lane. You really doubled down on the sectors that you worked with and the power of being so focused on those niches and truly understanding their pain points. And for me, perhaps one of the most powerful connections that I've made during this conversation was when you were talking about asking the clients what they wanted. It goes back to Stephen Covey and the 7 Habits. When it comes to our clients, seek first to understand, then to be understood. Alistair, it's been a real pleasure having you on there. I'm sure that the audience will have learned so much, probably more than they've learned for the last couple of years. Thank you so much.
Thanks, Carl. It's been a pleasure.